Hi, this is Tony Sagami. Hey, let's talk a little bit about gold this week. I caught the attention a quote from Richard O'Brien. He's a CEO of Newmont Mining, so he knows a thing or two about gold, and he had this to say about the price of gold. I am a firm believer that the gold price has not reached its peak. $2,000 gold will probably be in reach. People need to get with the program. Pretty bold quote. Now, O'Brien is probably right, and the Chinese are already with the program. According to the World Gold Council, the demand for gold has risen by an average of 14% a year since 2001 in China. That's some pretty substantial demand growth. And that's still going even bigger in this first quarter of 2011. The consumer demand for gold climbed to 233 tons. That's a 47% increase over the first quarter of last year. Now, usually most of the demand for gold typically comes from jewelry, which accounted for about 64% of the purchases. However, the demand for coins and bars is also zooming. In that same first quarter of this year, China purchased 90.9 tons of gold bars and gold coins. That's a 123% increase from the same period a year ago. The problem, though, is that even though China is the world's largest producer of gold, a lot of people don't realize that. They think South Africa is. But China is the #1 producer of gold. It produced 351 metric tons of gold in 2010, while it used up 700 million metric tons. So that's a big disparity in supply and demand. Now, why do the Chinese love gold so much? Well, the first reason is cultural. Gold has long been associated with good luck and emperor status. Birthdays, weddings, New Year's are occasions which gold is typically given in exchange. And this tradition continues to contribute to gold demand in China. Also, the second issue would be wealth. Simply, Chinese have more money to invest. In 2005, there were 15 million households in China that had an annual income greater than $4,300 a year. But that figure is expected to reach 75 million by 2015. So they have to put that money somewhere. The third reason would be inflation. The inflation rate in China is at 5.3% on a year-over-year basis, and that probably really understates the true inflation rate. The Chinese consumers see that, and they are seeking gold as a place to protect their money. Lastly, safety. It's been over 70 years since the communists seized power in China, but a lot of the older Chinese and their children still remember the confiscation of wealth. A significant amount of the Chinese savers simply don't trust the banks, so gold is one of their only options. Now, this might interest you. Even though they use a lot of demand in China, it's the second biggest consumer of gold behind India. And lastly, the big wild card is the People's Bank of China. If it was even a shift, just even a small portion of its $3 trillion in foreign exchange reserves into gold, gold prices would skyrocket. Now, there's a lot of ways to invest in gold, but I want to talk to you about two gold options you've probably never heard of before. The first one is Zijin Mining Group. It's China's largest producer. Zijin is traded on the United States over-the-counter market, so you can buy it right here in the U.S., and its ticker symbol is ZIJMF.PK. ZIJMF.PK. The other one is coming down the pike. Chow Tai Fook. Fook is one of the largest jewelry and gold retailers in all of China, and it's going to go public on the Hong Kong Stock Exchange sometime in the next few months. Now, there's over 1,400 retail stores in China, and they always have a very long parade of customers in them every time I walk by one. Chow Tai Fook plans to open 200 more stores each year with these IPO proceeds, so I suspect it'll be a very successful IPO. Now, I'm not suggesting you rush out and buy either one of these stocks tomorrow morning. As always, you need to do your own homework and decide for yourself, but gold should have a place in everyone's portfolio. Until next week, this is Tony Sagami signing off.